Ladies and gentlemen, thank you very much. I'm still talking to Miss Esther Kakiza from Dyer and Blair Stockholm here in Uganda, licensed of course by the Capital Markets Authority to offer financial services in terms of brokerage, in terms of financial investment advice, and as well as asset management. Ms. Kakiza, before we went for the break, we were talking about the equities and how they work and how people can benefit from them. There's something called the dividend that people really anticipate when it investment in the equities. And the moment, for example, a company doesn't issue a dividend, you see very many disappointed investors pull out of the market. What is your opinion on this? Should someone always expect a dividend when company?
Of course, by the time I invest in the company, I expect a return at the end of the year. So, yeah, people should be expectant. People should expect a dividend. You talked about people pulling out when they don't get dividends. First of all, understand why isn't that company not giving out dividends? Is it because they made a loss? Why did they make a loss? Is it because they are going to reinvest the money for other bigger projects so that you get something better in the future? You need to understand why they are not giving out dividends before you pull out. So understand why they are not giving dividends before you make an action. Stay or pull out. And also keep on the watch. Just like I said, information is out there on their website. Analyze their balance sheets. What do they have to say? Yeah.
The issue of the dividend, what if it doesn't come? For example, we saw the banks were suspended in terms of issuing dividend for 2 years. Bank of Uganda said that was due to capital reservation and trying to keep the banks flowing in the money, in the banks, money flowing in the banks. Example, maybe the company doesn't issue the dividend and issues what is called a bonus issue, like we saw National Insurance Company did. How does that benefit the shareholder? For example, in the case of a bonus issue there.
Yeah, bonus issue basically means that instead of giving you money, they are going to give you shares. Bonus that you get, you can trade them to get money, or you can keep them and realize future dividends or capital gains. So either way, dividends, bonus, both of them work.
And then how about a rights issue? There's also something called a rights issue sometimes.
A rights issue is a company seeking for additional capital, but with existing shareholders. So it will sell shares at a certain amount to existing shareholders, only existing shareholders. If you're not an existing shareholder, you can participate in a rights issue.
Is it like a second IPO per se for the company, saying that you know what, we are giving more shares but only to shareholders?
Yes.
And the issue of the IPO, because people have this perception that the IPO may be, why is the IPO even for just a specific period of time? And if a company says we are selling 20% of our shares to the public, and maybe they are able to only be able to sell 15%, what happens to the other 5%? Is it the one coming now in the bonus issue? Are they shares that can be sold within the shareholders? What happens really? What's the difference between this IPO happening and all these other issues like the rights issue, the bonus issues and the like?
Okay, basically a primary IPO, it's the first time the company is coming to the public and saying, look, public, I'm selling my shares. Then a rights issue, they're already in the market, but now they are seeking for additional capital. Yes.
Oh, okay, so it's not an IPO in any case.
It's not an IPO.
Okay. And now let's look at the products that you said you have. You talked about the fixed, and you also talked about the asset management. Wealth management, sorry. What are these products and what do they look like?
Fixed income is basically fixed deposit and treasury bills and bonds. So we've been talking about risk. If you're someone of low risk, treasury bills and the way to go. You still get back your money the way it is with a little interest. Yeah, so that's fixed income. Then wealth management. I have maybe 3 Kenyan million shillings or about 120 million Ugandan shillings aside, and I want to grow my wealth. Maybe in the next 10 years, I want it to be 200 million. Then I'll get that money, see what can bring 200 million in the next 10 years and invest it accordingly. It can be in equity, fixed income, it can be in real estate. I'll get various products and invest your money and then get you that return that you're looking for.
That is now wealth management.
Yes.
When you're doing wealth management, for example, do you also assess the risk appetite of this person and then get to know?
Yes.
Okay.
Every financial product, you have to assess the risk appetite of a particular individual or institution.
Do you have a collective investment scheme as well?
No.
No.
Not yet, but
not
it's something in the pipe.
Because I think it also comes under the wealth management, but people can use their small monies, right? Now, let's look at the comparison of these investments. You talked about property, which is very interesting. Many people in Uganda, they will say, when I get my 10 million, and I know my land will appreciate. Over what? Over what? Do you think this is actually the narrative in property?
Actually, that is the challenges we are facing. When someone comes and maybe buys shares and then they find that price hasn't appreciated so much, they tell you, if I would have invested this money in buying land, I would be far. I wouldn't be here. So that is one of the challenges. Whereas buying land is and gives a lot of returns, you need liquidity. You need liquidity. That is why we ask you to risk buy. If you've invested in real estate, come and put some money in the stock market, because you need liquidity. At one point in time, you might have an emergency. Maybe you want to cater for a medical emergency. Maybe you want to cater for school fees. You cannot buy your land you cannot sell your land in 3 days.
Otherwise, you sell it at very poor
returns. Whereas with shares, you can even sell it within a minute, as long as so that is why we say, yes, land is good, but stocks are equally good because they offer liquidity benefits.
Yes, this mindset usually comes about because of probably what we are seeing in the economy. And one of in our topic, we had a discussion on the sustainability of investment in financial markets and especially the capital markets. Right, the tough economic times, people get discouraged. Prices are high. The cost of living is very high. Someone, even if they earn, for example, 3 million, they find themselves at the end of the month saving about only 500,000, and they say, how can I put this now in the markets? Maybe let me keep it so that I can easily, survive for the rest of the month. What do you think Ugandans should know in these tough times? Can I still save and invest despite the fact that the little I'm getting, there's a lot of pressure on it? Can I still invest especially the capital markets?
First of all, as a stock market, we see a lot of panic selling. We also see the people who understand the stock market coming in to buy, because this is for them, this is the right time to buy. So as an investor or as someone out there who has little money, don't be discouraged. Don't panic. Stick there as long as the company you've invested in has a strong balance sheet, has strong foundations, has strong business models. Stick there or continue to invest, because usually in these tough times the prices tend to go down. So keep building your portfolio. It's even a good time to rebalance your portfolio. By rebalancing, I mean if you've had losses and then you buy at a lower price, your portfolio is balanced. You almost take away that loss. So keep buying more stock. But again, it's time for you to also be very analytical when investing. Pay attention to the details you've not been paying attention to. Does a company bring stability just in case you got a problem and you need to liquidate? Will you at least find it at that same price or a price that is not so low, or you've not made very many losses? So be analytical. If you're a low risk appetite person, this time don't give up on investing. Look for products that give a low return, but with a low risk. Yeah, that's the advice I would give investors in these tough times.
Well, some of the most profound investors in the world, like Warren Buffett and all these other people, they say that for them, whenever inflation is there, the economy is tough, and recessions are in the foresight, they say that is our time to invest. And you see them buying here and there, buying stocks, buying what, and some of them have returned with a very good return in the end. Is this now the case that we should also become more aggressive and be resilient at this moment?
Yeah, be aggressive, be resilient, but be on the watch as well.
Yes.
Yeah, it's very important. It's very important to be on the watch, know what you're investing in. That's what is important.
Knowledge.
Yeah. Yes.
We've even seen people invest in, for example, cryptocurrency, and then the next day the company is closed, and because of lack of information.
Exactly.
How can we address this? We have the internet, I understand. We have various newspapers. Where can people reliably say they can find information? Because even the internet is also sometimes not a very reliable source when it comes to information. Now, let's look at now the stock markets, for example. Where do you think people can find authentic information regarding stocks?
Authentic information is found on the websites of different companies that, for example, information is published in newspapers. The Capital Markets Authority requires issuers, all participants in the market, if you have any information that you want to put across, or balance sheets and what, put them in the newspapers as long as they are verified by them.
Talking about the fixed incomes, right now, if we are to look at the returns, honestly, on the fixed incomes, they are quite attractive. Because in terms of inflation, we are looking at the central bank rates going up, and these, of course, in tandem with the coupon rates on the bonds and the bills. Do you think it is the time to invest aggressively also in the fixed income?
Yeah, I think it is the time, given even the condition.
First of all, they're safe.
Almost zero risk, unless maybe the government is disorganized or somewhere there.
Overthrown.
Yeah, overthrown.
Yes.
So I think this is the best time really to invest in fixed income. Yes.
Let's talk about that product more. How can someone, because we know stocks, you open the SCD account. Is it the same case for now, for example, purchasing a treasury bond?
Well, for treasury, there are brokers who offer the service and those that don't offer. I think Dare and Blair is one of them. Crested Capital. I think they're offering that service right now. So if you need to invest in treasury bills and bonds, there are people to run to, and then also the primary banks. Yeah, the primary banks, I think DFCU, Stanbic, to mention but a few. Yeah, you can invest using them.
The interest rates on these, for example, the bonds, usually they are attractive, but they look so much long term. For example, you have a bill of 10 years, and maybe the rate is at 11%, and maybe in the 5th year somewhere, I want to liquidate and pull out. Do I benefit from the past 5 years I've been able to hold this bond?
Okay. Just like stocks, how stocks work is almost the same way how treasury bills and bonds work. Treasury bills are short term. That means 3 months, 6 months, and 1 year. Treasury bonds, 2 years and above. So If you're looking at a bond of 5 years and you buy it there, you'll get a coupon every after 6 months. Imagine you're tired of the bond, maybe you get an emergency, or maybe you just want to go into some other different investment in the market where you can sell that bond.
Yes.
Forgo the coupon, the coupons, and then sell your bond at a reasonable amount of money and then pull out.
Wait, what do you mean for the coupons? Do I give them out?
Of course, when you're selling the bond, it's the coupons will go to that person.
Even the ones that have been able to maybe survive with the bond, the ones, for example, now,
those ones will be given to you every after 6 months. Yes, as long as you hold the bond.
Not when you said forgo, I thought you said bring back all the other.
No, forgo the bonds that.
Okay, that have not yet accrued.
Yes.
So meaning at that moment, I'm not getting my full coupon. That of course I would have got maybe after the maturity of the bond.
Yes. Yeah.
And by the time this bond matures, do I get now back all the money? Because as you have said, every 6 months they're giving you coupon. So do I get back all my initial deposit at the end of the maturity?
Yeah, you get back what you invested. Plus the last coupon. At maturity.
Wow. Wow, that's very interesting. And I think very many people don't know about this. Maybe when they hear treasury bonds, they think they're for government officials or something, but they're for the public.
They're for individuals, they're for institutions. Yeah.
Wow. Interesting. Now let's go to the investment advisory also. What do you have to offer in the investment advisory portfolio?
In the investment advisory portfolio, we advise corporations, governments, local governments. Yeah, so I think you've heard of the lead transaction role, sponsoring broker role, maybe lead broker role, all that falls in investment advisory. So for example, if a company like Airtel wanted to list, we help them through the listing process. If a company maybe like NIC wanted to put up, additional capital, we help them in the rights issue.
Okay.
Yeah, all that falls in an investment advisory. If a company is looking for money, maybe like Stanbic is looking for money, we've advised them before on a corporate bond. Yeah, so they issue a corporate bond, get capital, and then pay interest to the people who have bought the bond. Yeah.
Let's look at those two classes of people. We have the companies that want to list. We also have the companies that want to get corporate bonds. How do you assess these companies? Can I also come with maybe my company manufactures juice and I'm from nowhere, I'm not known, but I have my books and I say, hey, I want to list on the exchange. Can you help me?
Okay. We have the main market segment where most of these stocks are listed. MTN, NIC, DFCU, Stanbic. We have roles before you list on them. Medium business, SMEs. That one you can list by introduction. Yeah, so we'll basically look at maybe your small company may fall there. You just need to have made profit like for 1 year. And then maybe I help you with your corporate governance. I set you up for listing on the GEMS. Before you know it, maybe you'll get to the main market segment.
Yeah, wow, that's beautiful. So you provide a full package. You have something for the investors and also for the businesses.
Yeah.
Wow. Thank you very much, ladies and gentlemen. There you have it. That was, of course, the story of Dyer and Blair, their stock brokerage firm. I've been talking to Miss Esther Kakiza, who is their general manager at the firm. Now, Miss Esther's out of this place. Maybe you can give your parting shots and your last words to the public watching concerning investment in the stock market.
Okay, yeah. My part be, it's very important to risk diversify. I think as Ugandans we are lacking that. most of our investors that we get at Dyer and Blair always look at real estate. Yeah, real estate, it's a good investment, but look at other options that can give you liquidity. Look at things like the stock market, look at things like treasury bills and bonds, diversify your portfolio.
Wow. Thank you very much for honoring our invite and for coming here today to spend some time. And
Thank you
we
for
are really
hosting
grateful.
me as well.
You're welcome. There you have it, ladies and gentlemen. That was Miss Esther Kakiza from Dyer and Blair. And of course, we've been talking about the brokerage. I've been talking about the various investments. As she has said, we need to diversify our investments, not just into properties and rentals and so on. We need to invest in some of these securities if we are to survive in this era and age. My name is Anthony Sebale. Being your, and of course, we'll catch you tomorrow, same time, same place. Coming up is UG Tukole with Mr. Fred Makuya. But of course, later on, we'll be also talking about skill up in the day. So I hope you have yourselves a wonderful day, the rest of the day. My name is Anthony once again, and goodbye for now.